Welcome to the new weekly outlook for the last week of March of 2022, and then also the last week of quarter one of 2022. So let's start off with some fundamental analysis, and then we're going to go ahead and move on to the technical analysis as always. So we're going to start off with some geopolitical news. So what we have is NATO allies split on whether they should talk to Putin. So we have some leaders that are saying it's going to be helpful if we're able to talk to Putin and kind of focus a little bit more on which conditions are more acceptable by Ukraine for any sort of accord. So they are saying that there's a possibility that if they talk to Putin, then we can come to some sort of a peace deal, which is going to help put an end to this war. On the other hand, you have other leaders that are projecting a different kind of a view, and they're skeptical whether or not Putin is actually going to be serious about negotiating any sort of acceptable peace deal. And some are even going as far as saying that those who push Ukraine to agree to any sort of peace deal without the full withdrawal of Russian troops serve Putin. So you have this mixed and split sentiment within the NATO allies of what should be the next acceptable action moving forward. So this is very important as we start to see a lot of the risk currencies and also safe haven currencies and commodities and other asset classes tapping into some of the key levels and now starting to reverse as we're coming close to the end of the first quarter. But the war has been going on for almost 2 months now. So this is very important to understand and kind of being able to predict what would the next step be when it comes to the NATO allies and how the war is going to continue to either escalate, or are we going to see some sort of peace deal and the war kind of dying down. Now, moving on to macroeconomics, we have the global supply chain issues still continuing and the global supply chain strains strengthening from the war in Ukraine and because of China's COVID lockdowns. We've already seen that inflation has been increasing because of the monetary policies that have been put into place and the liquidity that has been injected into a lot of the financial markets by a lot of the different leaders and central banks in general because of the pandemic over the last 2 years. So a lot of intervention that went on from a lot of different avenues. And then also because of the war that is happening in Russia and Ukraine. We're also starting to see this lower growth, even though countries are opening up and they're learning how to deal with COVID and kind of move around it. We still have slow growth. We still have high inflation. So now we're only starting to see these issues just worsening. So if you continue down this article, you'll see some more details about that. But that's pretty much what the summary is when it comes to the global supply chain issues. Now, moving on to the Bank of Japan bond intervention, what we have here is Japan's 3-day plan, Bank of Japan's 3-day plan for unlimited purchases of benchmark notes on Tuesday. So essentially what's going on here is there's this connection of monetary policies and the bond market. So monetary policies affect pretty much every aspect of the economy. It affects the currencies, it affects, any investments and spendings and all that goes on into the country. So the relationship between bond prices and low interest rate or interest rates is inverse. So low interest rates would translate into higher bond prices, and the relationship between higher bond prices is inverse with the bond yields. So higher bond prices would mean low bond yields. So bond yields are essentially the return an investor would make on the bond depending on the price. So what's going on here is Bank of Japan is intervening by saying that they're going to continue this unlimited purchase of the benchmark notes starting on Tuesday, so starting today. So what that essentially means, the unlimited purchase of benchmark notes, is that this is a type of way that a bank can provide liquidity into financial markets, but especially in this case, the bond market. So when a central bank steps in and they say that, hey, we're going to buy unlimited bond purchases, that's more of an open-ended commitment that they're putting out. And that way they can add more liquidity to the bond market. But if there's too much liquidity, then they can also sell these bonds to stabilize the bond market or any other financial market that they're kind of trying to intervene into. So we're starting to see this intervention from Bank of Japan. And so overall, when it comes to fundamentals, we're seeing progress when it comes to the NATO allies and what's going on with the war and all of that. We are starting to see talks, whether or not we're going to continue with the talks. So kind of not too positive, but also not negative either. So we're kind of in this mixed sentiment, but a little bit more on the positive side. And the supply chain issues increasing, which is obviously not a good thing. And then you also have the Bank of Japan intervention because they have maintained accommodative monetary policies for a very, very long time, maintained negative interest rates for over 5 to 10 years, and they're still maintaining the same thing. And that's also because they're still trying to deal with the COVID lockdown, post-COVID lockdown consequences, and they still have COVID cases, and they're still dealing with inflation. They're still dealing with the global supply chain issues in general. So when it comes to fundamentals, we have a little bit of progress only when it comes to the geopolitical side, but other than that, we are still seeing that we don't have enough confidence when it comes to global risky assets or anything like that. A lot of the investors are still moving into some of these safe haven currencies, commodities, and financial markets. Now, moving on to the economic calendar. We started off quite easy. We had Governor Bailey speaking this morning in London session. So that's the only high impact news that came out so far. Now going into pre-London session, you have the German consumer climate coming out. So that's going to be very important if you're trading the euro. But if you're trading the pound, then you have some news coming out in London session. Other than that, there's not much happening until 7 a.m. PST in the New York session where you have the JOLTS job opening. So now we're starting to prepare for NFP. So we are going to have NFP this week. We will see the market kind of consolidating here and there as it prepares for a lot of this employment news to understand where are we sitting when we're moving towards Friday for NFP. And then you also have consumer confidence, which is obviously going to be important because this gives you a little bit of an outlook when it comes to consumers and what are they expecting for the next couple of months or so. After that, in Asian session, not much happening here again, neither in pre-London session. And then on Wednesday, you have ECB president speaking in London session. So that is one thing that you guys can watch out for if you're trading the euro. And then you have ADP non-farm employment change coming out in New York session, right when the market opens up on Wednesday. So this is going to be important also because this is pretty much giving you a head start and a forecast of what to expect coming into NFP. So that would be one fundamental or economic data to trade when it comes to Wednesday New York session. After that, as you can see, nothing really much else coming out. If you're trading, US oil or USD CAD, this is going to be another important fundamental or economic data to watch out for. And then going into Asian session, not much, as you can see, nothing really too important when it comes to the yen or anything like that. But in pre-London session, we have some good GBP data coming out, which I do expect the market to react a little bit to as soon as it opens up. Then going into Thursday, you have the OPEC meeting. So this is going to be very important, given how the war is already affecting energy prices. And that is being reflected throughout different sectors of the economy as well, because oil is used in pretty much every single sector. So the OPEC meeting, are we going to end up seeing more productions of oil when it comes to the global supply? And in the last couple of weeks or so, we have been seeing some news about this, where Boris Johnson, for example, also went and tried to talk to OPEC and try to request for more production of oil. And then going into the New York session, so you have Pce Price Index. So this is not CPI, it's a little bit different because this excludes food and energy. So food and energy, for the most part, we have seen them being the outliers and kind of skewing the data in one direction or another. So this differs a little bit from the CPI in the sense that this is only talking about goods and services that are consumed by the individuals and by consumers, excluding food and energy. So this is going to give us the core information of whether or not prices are increasing, whether or not there's hyperinflation going on, excluding food and energy, which we already know are the outliers skewing the data. Now going into Asian session, on Thursday, you have some manufacturing index coming out. So that's one thing that you guys can trade right when the market opens up, 10 minutes before the market opens up. So this paired with the market open can give you a little bit of volume. But other than that, this is a session, or this is the Asian session right before NFP, and then also London session right before NFP. So I don't expect the markets to move too heavily until there's any sort of macro fundamentals coming out, not just economic data. And then on Friday, you have NFP coming out, which is also going to be very important as that's the start of the new quarter. So that's the fundamental side. Now moving on to the technical side, we're going to start off with the yearly time frame here on gold. We're going to mark off some of the key levels. I'm going to mark off the top wick here that we tapped into this quarter already, this year already as well. So I'm going to do 2070 flat. That's the top wick. I'm also going to mark off this 1900 area right here, because if price breaks below that, then I know that price is pretty much headed back down into some of these support areas around 1830 or so, and that's what we can start to target for any sort of sell opportunities. But if we maintain above 1900 going into next quarter, then we can potentially come back and tap into these areas of 2070. But for that to happen, we need obviously more macro fundamentals coming up, reflecting any sort of market uncertainty when it comes to market sentiment or market fear. And then I'm going to go ahead and mark off this little support area of 1830 here. So that's going to be our first target. And if price continues breaking below that, then we can go ahead and discuss some of these lower levels down here. Now going on to the quarterly time frame, we start to see that there's only 2 days and 17 hours left for this quarter. We've made a massive top wick already into 2070, reverse back. What I want to see is, can price hold on to this little support area right here, this range? So what I'm doing is using the average of all these wicks to understand, how wide my rectangle is going to be here, my zone is going to be here. And as long as we can close above 1900, so we're in this area of liquidity, then that gives me a little bit of confidence that we may continue pushing bullish from a technical side, but the fundamentals are the drivers of the market. So we need to see continued fundamentals as we're sitting at some of these liquidity areas. How do you know it's a liquidity area? As you can see, price has tapped into this several times, and every time it has tapped into it, there has been good movement. So price made some top wicks, came back down, made a massive bottom bearish candle here, leaving a little bit of a bottom wick. We come back and tap into this area with this bullish candle, and then from that, we have a sell-off, creating our first low into 1680 area, which price has still not broken for the past almost 2 years or so. If anything, we've just consolidated into this area since last year, around June or July, consolidated into this, and then finally broke out of it early this year, and then continued bullish to come back and fill this wick to the left. So as long as we can close here in the next 2 days on this monthly candle, that gives me confidence that as long as we hold on to this area, we can continue pushing up. But as soon as we break below 1900, the first area of target is going to be 1830. And if price breaks below that, you're coming right back into an area of liquidity, which is all this consolidation. The market collects orders in 2 ways, retracements or consolidation. So this is your massive consolidation. Can price come back and consolidate into this? A very high chance, until we get some fundamentals to support the move in one direction or another. This move happened because of the war in Russia and Ukraine. We consolidated for a very, very long time. And then finally, we broke out of it with the Russia-Ukraine news. And then we continued as we start to see those tensions escalating. Now let's go ahead and move on to the weekly time frame. So what we see here is, again, all this consolidation where you see price tapping into this with massive wicks, price or the candles kind of closing into this area. Same thing here, and then a nice little sell-off. And then finally, we push up. A nice continued move up here into 2070. Price gives you a top break rejection, comes back, and right now we're still holding on to this area of support. So we can't necessarily, right off the bat say that, hey, we have some nice buy opportunities right now, because we need to see whether or not price is going to hold on to this as support. It is still Monday. You still have a lot of time when it comes to this weekly candle. We could only simply be making a bottom wick rejection, flipping back up bullish, and then continuing back up. Or if I'm going to look for any sort of sell opportunities, I need price to close into the zone somewhere closer to the bottom of the zone, and then continued sell off. So either way, the only way that we can look for buy opportunities is if price can hold on to this area support, which is going to happen on the daily or on the 4-hour timeframes, and then continue pushing, with your first target being this minor resistance that price has been holding on to for quite some time here, as you can see. So this is the first area that we will target. And then it's this resistance here. You can absolutely look for some sort of scaling opportunities as price pulls back into this area, holds onto it for support, and then continues back up to 2070. That's for buy opportunities here. If we're going to look for any sort of sell opportunities, what I need to see is candle closes. So I need to see either this weekly candle or the next one continuing down and closing into this area like this, and then the next candle making some sort of top wick rejection and then pushing back down. If this candle closes bearish without any sort of top wick as it is right now, and the following one starts pushing down without any sort of top wick, that's not potentially a sell opportunity that I would want to enter based off the 4-hour daily or the weekly. I need to see some sort of a top wick and then continue to push down, or this week the candle to come back and close below the zone. So either of those situations are perfectly fine if we're looking for any sort of sell opportunities. So pretty simple on the weekly so far. We're just holding on to some 1900 area as some sort of support at the moment. And then if we're going to look for any sort of buys, we need the area to be held onto support as it is right now, and then continue pushing bullish. If we're going to look for any sort of sell opportunities, then we need candles to close below the zone and then continue pushing down. So essentially what really market ended up doing here is pushing up that massive bullish push up that we saw after price broke out of all this consolidation down here. A massive push up came back down, and it seems like it's holding on to some sort of support. So what we need to see is a bullish push up and then continue back up to 2070. But obviously you could target some of these lower levels as partials first and then look for your scaling opportunities. As price continues down, this could end up pushing down here. As that happens, then we can look for some intraday trades like scalps and even day trade opportunities to trade into this 1900 zone. But if you're going to try to turn those into any sort of swing trades, then you need this 1900 area to be broken, retested, and then continue to push down. Let's go into this 4-hour time frame here. So what we have is a nice little sell-off that happened. Price held on to, again, this 1900 area, this zone as support, retraced, so corrected some of this bearish push down, retraced, and now we're coming back and tapping into this area. So the last 4-hour candle closed like a doji. The current one pushed up here, came back, and it's currently a doji, and it's about to close in 22 minutes. So that tells me that there's no sort of economic data or fundamentals right now that are really driving the market. If anything, we're kind of collecting orders in this area of liquidity, which makes sense from higher timeframes and down, given how price has reacted here previously. So we just need the market to kind of do its thing, hold on to support, push in one direction or another, and then we can look for some potential buys ourselves. So if I were to trade this in, let's say, London session, I would want price to break out of all this little main consolidation area. Let's call this 1940 flat. So if price breaks above 1940, then we have some potential buy opportunities. You can target some of these areas up top here, so around 200 pips, for any sort of quick scalp buys. And then as price continues, then obviously target some of these minor levels, continuing all the way up to 2070. If you're going to look for any sort of sells, then wait for candles to close below this little support area right here. So around, let's say 1916 area, 1917. So wait for price to close below that. And then as it continues down, then you have about 170 pips that you can scalp for sells. And if price continues pushing, then you can turn that scalp into a day trade or more. When you drop down to the hourly, what we need to see is clean candle closes into this area, and then specifically wait for price to break below some of these support areas. As you look to the left of this, as you can see, price has kind of made bottom wick rejections here and then push right back into zone, made a bottom wick rejection here and push right back into this zone of consolidation. So if possible, try not to trade between this 1917 to 1940 if you can, and then wait for those clean candle closes for a better trade opportunity on gold. Now moving on to GJ, we have broken out of a multi-year consolidation right here. So this was your consolidation support down here at 140. And this was your consolidation resistance at 152.200. We finally broke out of that last year. And then this year we made that bottom wick and we're starting to push up. I want to see if price is going to be able to come back and kind of tap into these areas up top here again into 164, let's say 400. If it taps into that, then and breaks above it, then we can start to target some of these higher time frame levels up top here. But this looks like a clean buy opportunity when it comes to any sort of position trade. But again, remember that these are higher time frame key levels. So price broke out of all this consolidation here, gave you a little bit of a retest, made that bottom wick rejection this quarter, and pushed up and rejected 164.400. Again, you have this quarter ending in about 2 days. So the new quarter is going to start, a new candle is going to start forming. We need to see some bottom wick rejections and continuation back up. Specifically, I want to see a bottom wick rejection right here, and then a push back up. That's your resistance. We've seen price kind of pull up close to this area. That's the same level that price rejected last quarter. So you could adjust this here a little bit if you would like. So pretty much in this area of 158,400. And then continue pushing up to 164,400. So you have a pretty good range here that you can still trade for about 500 to almost 600 pips. Drop down to the monthly time frame. So all of this here was again consolidation resistance of 158,400. You have that little bit of consolidation here to the left. This monthly candle broke the bottoms and the highs of the previous candles, and that obviously shows some sort of uncertainty in the market. So wait for this candle to close, and then the new candle to start forming some bottom wick rejections, and then continuation back up. Or you want to see, is price going to reject this area, and are we going to continue pushing down, maybe to come back and collect some more liquidity as we wait for some more fundamentals to come out. Going on to the weekly, this weekly candle was quite optimistic. As you can see, there was no bottom wick rejection at all. We pushed up, left this entire range. We're kind of pulling back down. So price did just break out of this consolidation. What we need to see is, can price come back and respect this consolidation resistance of 158,400 as support, and then continue pushing back up. If that happens, then you have great position trade buy opportunities to continue up to 164,400 and then maybe even higher. When you drop down to the daily time frame, so last daily candle made that top wick rejection, the new one just started forming. So again, wait for price to kind of give you a direction of which way it's headed. If you're going to look for any sort of sell opportunities, you obviously want to wait for some of these support areas here to be broken at 161 area, I would say, and then a sell off to 158,400, which again is a consolidation resistance. To catch those trade opportunities, you drop down to the hourly time frame. So we just saw price reject this area right here, push back down. It's holding onto an area of support right here. So if price is going to continue pushing, you wait for the next 16 minutes or so, you wait for this candle to close, and then as it starts pushing specifically down here, then you start looking for your sell opportunities coming down to 158,400, and then you can either close out the entire trade, or you can take partials and let everything else run and look for potential scale opportunities to scale in all the way down to 152,200. Or you want to see, is price only going to hold on to this area support and then continue pushing back up. So all in all, 158,400 is going to be a very important level to see whether or not price is going to bounce off of that. So as you can see, price is clearly holding on to this area support. Wait for price to break below this for any sort of sell opportunities, and then if you're going to look for any sort of buys, then wait for this hourly candle to close in the next 16 minutes, and then wait for some sort of a top bottom wick rejection and continuation back up. Obviously use the 15-minute and 30-minute time frames to see if there are going to be any sort of break and retest. As always, if you guys have any questions, always feel free to reach out to me on Instagram or comment below, and I will go ahead and respond as fast as I can. Other than that, have a great rest of the week, everyone. And I will see you guys on Wednesday for the live session at 4 a.m. PST here on YouTube. So exactly on this channel. And trade safe, everyone.